Today, I'm excited to talk about some recent updates regarding SoFi, a company many of us have been watching closely. Let's dive into what's been happening and what you should know. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Now let's get into the details. As many of you know, I like to focus on important data points and analyze what's going on behind the scenes, especially with major institutions. Yesterday, I posted a quick video where I mentioned SoFi's strong performance at the close of the previous trading day. Interestingly, for the past few Fridays, we've seen a lot of large-scale buying of SoFi stock by institutional investors. This trend suggests that big money is becoming more interested in the stock, which is always a positive sign. One of the ongoing challenges with SoFi has been the Analyst ratings. For quite some time, analysts have given the stock lower than expected ratings, which has frustrated many investors. However, things seem to be changing. We're finally starting to see some higher ratings for SoFi, which is a welcome development. For example, a recent rating from Citi came in at $12.50, a significant improvement compared to previous ratings of $6, $7, and even $4. It's important to note that some analysts have lower success rates, like Andrew, who has a 49% success rate. However, even he has rated SoFi at $12.50. This is a notable shift, as it's been a while since we've seen any double-digit ratings for SoFi. This change could indicate that analysts are starting to recognize the stock's potential, especially in comparison to its peers in the market. Now, let's talk about earnings. SoFi's earnings report is about a week away, and this is an important time for the company. Typically, we see analysts release their ratings after earnings are announced, allowing them to factor in new financial data. However, SoFi often receives ratings before its earnings release, which is a bit unusual. This has been a pattern with the company, but it's encouraging to see these double-digit ratings come in now, even before earnings are released. One of the reasons these low ratings have been so frustrating for investors is that they pull down the average rating for SoFi. Currently, the consensus rating for the stock is around $8.63, which reflects a 15.23% downside. Despite this, many investors believe that SoFi is undervalued and that these lower ratings are part of a broader attempt to suppress the stock price, allowing certain institutions to accumulate more shares at a discount. While this is just speculation, it wouldn't be the first time we've seen something like this happen in the stock market. Let's take a closer look at institutional involvement with SoFi. Even though we don't have all the data for Q3 yet, we can use Q2 data to get a sense of the trend. In Q2, hedge funds purchased 26 million call options on SoFi, and all 13F filers collectively bought 93.72 million. These numbers represent increases of 27% and 14%, respectively. This indicates that institutions are continuing to increase their positions in SoFi, which is another positive sign for the stock. Currently, 41.84% of SoFi shares are held by institutions, an 11.7% increase from previous quarters. While this may not be brand new information, it's worth noting as it shows continued confidence from big investors. On the retail side, about 54.91% of SoFi shares are held by individual investors. Stocks with a high percentage of retail investors like SoFi are often targeted by short sellers due to the volatility caused by retail traders. In Q2, SoFi stock hit a low of around $6, and it appears that retail investors panicked and sold off their shares. The stock fell by 9.33%, likely as a result of this sell-off. Despite this, institutional investors continued to buy, showing their long-term confidence in SoFi's growth potential. This is something to keep in mind as we approach the next earnings report. Another positive sign for SoFi is the recent increase in web traffic to the company's website. In the past, higher web traffic has been linked to an increase in member growth. As SoFi continues to grow its customer base, we can expect to see growth in other key areas such as deposits and product offerings. This in turn makes investors happy, which ultimately benefits the company. In summary, these recent analyst ratings and institutional activity give us some insight into what's happening with SoFi behind the scenes. While we've seen some frustratingly low ratings in the past, the new double-digit ratings are a promising development. It's clear that big money is backing SoFi, and many investors are starting to realize its potential. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.